It's just we're at that extreme now, highest ever versus the rest of the world, versus GDP, versus commodities, the 25-year high.
I'm just looking at the S&P 500. Seems to have been on a pretty good tear since April. How does the sort of global market perspective feed into kind of what you think could happen on commodities?
Well, I'm glad you mentioned S&P 500 because it just can't ignore it. Something I've been speaking about for a while, having run value at risk models in crude oil. If the S&P, it's up 10% on the year. But now most analysts are adding another 10% for the year. It's just usually how it happens. It's not going to go down until it goes down. It's just we're at that extreme now, highest ever versus the rest of the world, versus GDP, versus commodities, the 25-year high. It's got to keep going up. And that to me is a risk in 2H. First of all, bottom line, by the end of the year, if the stock market is down from these levels, expect crude oil to head towards 40 at a normal cycle. Expect copper to come off $10,000 a ton, which is it's significant resistance. Right now, copper, if it closes here, is around the highest end of the year close ever, which use London copper, 9,700 bucks, head towards 8,000. That's normal. You need the stock market to go